it's Jane here, and I'm often asked about the Suburb Selector software that we have introduced. Obviously, this is part of Location Masterclass and Ultimate Guide to Renovation. So obviously, Ultimate Guide to Renovation looks at location for the first 6 modules, and then we go all into the renovation itself. So the importance of location and price point. So let's just put in a price point here, like 750,000. We're very happy to go 30% below that. Maybe you're a good negotiator, 10% above, and a 20-kilometre CBD distance. So what comes up here is all of the suburbs with the information that comes through from SQM Research every month, all of the suburbs and their median price point for houses in these areas. So you can get a feel for the distance, so the distance and the price points for these areas. So this is kind of cool. So you can do a really quick analysis here. And let's just say that you choose a couple of these suburbs. So let's choose, say, Broadmeadows and Braybrook. So there's a large discrepancy here in price point. So we might also choose Brooklyn, keeping with the bees. So what happens here is we go away, we pull all the data from SQM Research and from the 2016 census. And what we have here is almost like a kind of a written dot map. So we have Braybrook, but we also have the other suburbs around Braybrook. So we get a feel for the ones that are closer to the city. You know, the ripple effect, we would assume that they would have a higher price point. So we definitely see that with these suburbs that are close to the city. And those that are a little bit further away, we expect to see have a lower price point. So this is kind of like that ripple effect that we're seeing. Now, remember, with the dot map, we're looking at 10-year growth here. Now, if you're trying to get all that data from the back of the magazines and the back of your investment property magazine, that is considered the annual growth, and it's reported as annual growth in the back of the magazines. And when you're looking at maybe 1, 3 or 5 year growth in the magazines, obviously you might see something like 30% for 3-year growth. That is a cumulative, where this is per annum. So what we've done is we've pulled all this data from RP data. We're looking at the median yield, so you can compare those quite quickly, the rents, the change of stock on the market, so you get a real feel for what's been happening. Less stock on the market, for instance, so it's probably getting tighter to buy. We've got the number of sold, the days on the market in the last 3 months and the last 12 months, so we're getting an idea that it's slowing down, for instance. So this comparison, the percentage of renters also in the area, and percentage of public housing. So you can see here, the dark suburbs are the suburbs that we chose in that beginning list. And once again, we've got an idea of the surrounding suburbs in the area. And we are here, and we've got the surrounding suburbs. Now, I obviously in the course go through some of the filters that we would look at and how we would distinguish one suburb over the other. But just let's quickly choose 2 of these main suburbs that we've chosen, and we can have a look at how we can compare these quite quickly. So we pull the census data, we understand what the typical property is. We get a feel also for the demographics in the area. There's obviously a lot of university students here compared to here. So this might be something where you look at opportunity for maybe student accommodation. We've also got, an idea here about the primary means of transport, the distance to town, and when we start looking at some of the sale data as well, we can actually start looking at how one suburb compares to the other. So what the growth has been in the last 1, 3, 5 and 10 years, and the number of properties that have been sold, bit of vendor discounting, and the number of types of properties as well. So, one of the mistakes people make is they go, oh, this is a really great suburb, but I can no longer afford to be there. I'll just buy a unit. And as you can see, of the units that are for sale, very small amount. So it's not typical. And although you might have the right suburb, you may not have the right property, and hence you have risk. Whereas in this suburb, as you can see, buying a semi compared to a house, not such a bad thing, because half of the market has the same, half the market is after semis. Whereas here, not such a good idea buying a semi or a townhouse. And just to give you a final look at some of the other data that we pull out, and we just look here at the rental data. So the yield comparisons you can look at very quickly. Vacancy rates under 3%, so this is great. Stock at market change, we're looking at days on market, so this is getting tighter where this is releasing a little bit, which is probably around that pricing point, and the average income too. So we track average income over a period of time because it is an indication of gentrification. But I just wanted to give you an idea of what the Suburb Selector software looked like. And for those in the Ultimate Guide to Renovation, you get access to that in Module 2 when that comes out, and obviously in Module 3, and you have access to that forever, and we update it monthly. Anyhow, I hope this has helped with a quick little look at the Suburb Selector software. For those in the Location Masterclass, you have access to that, and those in the Ultimate Guide to Renovation.